Hello traders, today is the 21st of January 2011 and happy trading to you all. We have just sold the Dow Jones at this level here, exactly there at 11895. We are in this trade now, selling Dow Jones. Okay, why are we selling Dow Jones now? I will draw a horizontal line there for you to show you what we are doing here on this live chart of Dow Jones. Right now we are looking on the 2-minute chart of Dow Jones. We are using 2 minutes right now to enter the trade. This is about the timing. Okay, you may perfectly use any lower time frame for your entry point, depending on your risk tolerance, to have what we call accurate timing. Okay, why are we selling Dow Jones contrary to the market? People are buying. Okay, we decided to sell now Dow Jones. Okay, our entry point, do not forget, that is 11895. We have sold Dow Jones, and the bearish pressure is now on. Okay, we want to show you quickly on the weekly chart what is happening on the weekly chart. We will quickly draw on our chart the Fibonacci retracement of all the downtrend. Okay, in 2008. No, this is not exactly what I want to do. I will remove that and redraw it again. What I want to draw, I will show you clearly here. Bear with me, please. I'll get there. Okay, bear with me with this software. I'll get there. Okay, we're drawing the Fibonacci tool up to this level here. Okay, now a bit of cleaning up here to clean this one here. Okay, that's it. It's perfectly done now. Okay, we can move on now. Now, if you will look on this weekly chart of Dow Jones, we see that from May, okay, 2008, okay, from May 2008, okay, the Dow Jones were in a downtrend up to March 2009. Okay, so from 2008 to March 2009, the Dow Jones was in a clear downtrend. Now the price retraced up. Okay, we are in a region of 78% Fibonacci retracement level, a very important level. Okay, it looks very bullish right now because it crossed above where I put my red horizontal line. Attention on the red horizontal line. That's for yesterday. The price went above that red horizontal line, and again today you can see it's continuing the movement to the upside. The price touching this level where I place my cursor now. Okay, we want to sell Dow Jones. Okay, so we are in a very important key levels. Okay, and Dow Jones is right there now. We are looking for opportunity to sell. We are not interested to buy right now. Okay, we don't want to buy, we want to sell. Okay, so we are looking only right now for opportunity to sell Dow Jones. Okay, even though the market is still pushing Dow Jones in, we were saying since last Friday, we were saying that we should look for opportunity to sell. That's why we are still looking to do a clear-cut selling signal. We will take it. Okay, a clear-cut selling signal on Dow Jones, we will take it. Okay, now because we usually, suppose you are a very important investor in the market, okay, and you know that the market is about to go down, okay, or you fail to recognize that the market should go down, okay, and your portfolio is in danger, which means if the price starts going down, your portfolio will start going red, because a lot of people right now, I know, have bought a lot of stocks. Okay, so it's very bad for them right now that the Dow Jones going down. So these people, going into their mind, they will try to protect their portfolio. So what if you can move the market, what can you do? You move the market up first, so you can at least close your trade at break even. Okay, because sometimes the big money can be late to recognize that the price is going down. The price is about to go down, and a lot of traders right now are still buying, but they shouldn't buy because this is just a cleaning up. People are cleaning their portfolio. The price should go up first, so people come out at break even. Okay, and then they will sell. Okay, but so far, it does not mean that the Dow Jones will definitely go down, but all the indication that we are looking at, okay, looking at the daily chart, looking at the weekly chart, all is telling us, look at this is the daily chart, okay. What do we have on the daily chart? We have the ABCD chart pattern, okay. So from here, where I place my cursor right here, I will draw a horizontal line there for you, so you see exactly what I'm talking about. This is the A section here, okay, where I draw my horizontal line. I will make it thick for you so you can see clearly what's happening here, okay. This is the A section here. This is the B section here, okay. This is the B section here. This is the C section here, and this is the D section here. It is time to sell Dow Jones, okay. It's time to sell Dow Jones. I will not be prepared to buy anything at all in this zone, okay. In fact, we close all our bullish trend. If somebody want to buy, they can perfectly keep buying. This is excellent opportunity for day trading though, okay, when the market is trying to decide which way to go next, okay. But we can see clearly the ABCD chart pattern here. The same pattern we have also on the Australian dollar US dollar currency pair, and we told people that they should sell, It takes a long time before people understand that they should sell. But like I said to you before, if you are a market mover, okay, you have a power to move the market, you realize a bit late that you should sell, okay. Well, if you can move it up first, you will move it up first before you will sell, which means at least you close your trade at break evens, okay. But we are saying to those who are still in the market buying, okay, at least step aside, wait for Dow Jones to show the direction, okay, because we are in a very important level, 76% Fibonacci retracement level. The psychology around the 76% Fibonacci retracement level is to check the fundamentals. So far, the key economist data that we should pay attention to is the unemployment data in the United States. The unemployment data is not improving right now in the United States. In that condition, in the region of 76%, the smart money will be looking for opportunity to sell because the recovery is not getting ahead as people expect it to go ahead, okay. It's lagging, okay. So there is a valid reason to look for opportunity to sell considering the fundamental data of the unemployment figure in the United States, okay. So that's why we are looking again all the time for opportunity to sell, okay. Even though the market continue to go up, we will continue to look for opportunity to sell, okay. The A, B, C, D pattern, this is where people will look for opportunity to sell, okay. You do not just sell anyhow. We use the TSTW SYS08 to sell. That's what we are looking for. Right now, we are selling Dow Jones, okay. We move down. I will show you again on the monthly chart. What do we have on the monthly chart here? This is what we have on the monthly chart. The same part, the price went down and retraced back up, okay. As I say to you here, this kind of inverted head and shoulder here. This is the head here. This is the left hand side shoulder on this monthly chart. This is the right hand shoulder, and the price near this resistance level here where I'm moving my cursor here. But we are not interested at all to buy in this zone, okay. We want to sell. That's what we are doing now. Going back to our 2-minute chart, okay. We want to sell, okay. So we will sell, and we sold it right now in this level here at 11895, and right now the price going down. I'll make it thick for you so you can see what you're doing. What I want to say in this video is that sometimes other traders can overwhelm you, because what I mean by overwhelm, it means that the price does not lie, the price does not hide anything, okay. So how do we trade a 76% Fibonacci retracement level? Anytime we see a stock or a commodity or a currency reaching the 76% Fibonacci retracement level on the weekly chart, on the monthly chart, we will quickly check the fundamental, okay. If the fundamental is solid, okay, if the fundamental is sound, if the fundamental is healthy, okay, we will know that a financial instrument can continue the movement to the upside, because if it's healthy and it retraces to the downside, okay, so it's healthy, going up first, and then it pull back all the way to 76%, okay, that's a kind of discount, okay. But if the fundamental is not sound, if the fundamental is not healthy, If the financial instrument is not doing very well, we check the balance sheet, we check the economy news, and everything is telling us that this is not a quality financial instrument. And the price was going down first, and now he rallied back to the region of 76%. Of course, we look for opportunity to sell. Okay, so looking at the United States unemployment data, that is still lagging. It's improving a bit, but it's not perfect right now. Okay, we will look for opportunity to sell. If it was perfect, if we see that the unemployment figure is improving, okay, the latest figures are encouraging, okay, we won't be selling because we will be very, very careful. But it's not improving like people expect it to improve. Now, on the weekly chart, we can see that this is reaching 76%. This is not the best time to be buying stocks. This is not the best time to be buying stocks, okay? This is the best time to be taking profit. So if you were in a swing trade before and the price going up, you should buy. So what do we do now? We go to the Dow Jones 30 or the stock that listed on the Dow Jones 30. We will look for candidate that we can sell. That's what we will do. We go to Nasdaq 100. We will look for candidate that we will sell. That's what we will do. We won't be interested in anything to buy right now, okay? We will not be interested. Regarding the swing trading, this is not the best place to swing trade right now, okay? We will watch carefully until the price break the top resistance level, which is in the region of 130.64, and find a support above the 130.64. That's where people should start looking for opportunity to buy. But right now, I am not interested. We are not interested to buy anything at all. Okay, even if the market can push it up, push it up, push it up, we will be busy looking only for opportunity to sell the euro, to sell the Australian dollar, US dollar currency pair, to sell all the currency that are positively correlated to the euro USD. Okay, to sell the Dow Jones, to sell the S&P 500, to sell the Nasdaq. Okay, that's what we will be looking for. It does not mean that we will go and sell anyhow. Anytime we see a clear-cut selling signal, we will take it. Okay, that's what we will do. So this is regarding the Dow Jones. So we sold it here, as you can see, at 11895. Okay, the price going down. We will watch it together. We will let this video run so you see it for yourself live. Okay, on this chart, how we are approaching this trade right now. Together, we will see how far you go down. Yesterday, what we want to show you something quickly on the hourly chart yesterday, something very interesting. You see yesterday the market has given us a clear indication that he want to go down. Okay, so the price started going down. Okay, it started going down yesterday. Okay, went down exactly here at 4 p.m. London time, okay, which is 11 a.m. Eastern time. Okay, some traders come in the market and push the price up. Okay, why they are pushing it up? Because people want to get out, but they want to get out at a break even. They don't want to get out with a loss. Okay, because if you realize that the market is going to go down and your portfolio is completely red, what do you want? You want it to go up a bit, then you come out first. You come out first, and then you are happy. At least if you can come out at a break even, you are quite happy. Because if you fail to notice right here that it's supposed to go down, and you start seeing it going down, you won't be happy. But you will be praying that if the price can go up a bit, then you can come out at least at break even, so you do not damage completely your portfolio. You will be quite happy. And once you come out at break even, now you will sell. That's what's happening here. That's what's happening right here now. So we need to understand what's going on, not to be fooled, but all this blah 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 that the market is going up. It's not going up right now. It's going down. Okay, so we keep watching this video. We let it run, so we see it together. Okay, so I'm just going to sit here and together I will be watching and you watching it also. Okay, so keep watching please. Thank you. Hello traders, this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell anything. It's primarily for the TSTW24 traders. If you want to join us and become a TSTW24 trader or TSTW SYS08 trader, you need to go to www.stochastic-macd.com. Okay, another point I want to make here, we know that in the uptrend, very important point that traders should remember, in the uptrend, using the definition of the uptrend, the price must display a higher lows and higher highs. Okay, so we can see clearly here using that definition of the uptrend alone, which is a clear-cut language of the price itself, the number one indicator. The price was displaying a higher lows. This is a low here, this is a higher low, a high here, a higher high. Okay, and a higher low. Here there was a kind of weakness here today on this 2-minute chart. This is why we talk about a weakness in the uptrend. Even though the price was above the trend line, we experience in this zone a kind of weakness. Okay, the price went below the trend line, indicating that the weakness. Okay, but the price tried to retest the trend line, but the trend line was not validated as a resistance level. The price went above it, in fact found a support. Okay, and continued the movement to the upside. The price displayed this new higher high, okay, and a new higher lows. Okay, at this point in time, the price displayed a higher high compared to this high. But look at that. After displaying a higher high here, the price retraces back down. It shouldn't cross this line here. It shouldn't cross this line. This line here. This was the previous high. Okay, the price should maintain that. The price violated this line and went down. Okay, now we are here again on the trend line. And because the price is above the trend line, some traders did not see this weakness. This is a weakness, okay? After it crossed back below this line, this is a weakness. Some traders did not see that as a weakness. They are buying again on the trend line here. They shouldn't buy on the trend line here because the price has turned around. Look at that. It went up and turned around. You see, a beautiful turnaround. It went up and turned around to this high here. It shouldn't be doing that, okay? That's what he did here. The similar thing he tried to do here, you see, he went above this red horizontal line and turned around. And here, you can perfectly say that the uptrend is weakening. Even though the price is above the trend line, which many traders will consider as a bullish, there is a weakness in this zone. But the price did survive the bearish pressure here and continue the movement to the upside. This is the second confirmation of the weakness of the uptrend again. The price went above again this line and only to turn around again. It shouldn't do that. It shouldn't do that, okay? It should not do that, okay? And now again, you see, this is a clear-cut sell, okay? After it crossed below this line, that's why we sold it. It shouldn't be doing that. We sold it, okay? We will see what's going to happen in this video. We will let this video run so that together we learn something. So the language of the price, so the definition of the uptrend, can perfectly tell you what is going on, because some traders find it difficult when the price is above the trend line. It's considered, repeat, is considered as uptrend. Now, the difference is that is it a strong uptrend? This is the second question you have to ask yourself. Is it a strong uptrend? Okay, is it a strong uptrend? If it's not a strong uptrend, then look for opportunity to sell. This is what many traders could not understand, that the price above the trend line, we must continue to buy. Okay, but the price above the trend line, but the price is, the uptrend is not strong. If the uptrend is getting weak, it's telling you do not buy. At least, do not buy, okay? Do not buy. If you don't want to sell, at least do not buy. So you step aside, okay? So that's why we say a time to buy, a time to step aside, okay, and a time to sell. So even though the price here in this point in time, if you see this weakness going on and you do know you notice that, but you don't want to sell, you step aside. You step aside here. You step aside because the price alerting you that I'm getting weak. I can't cope anymore. Okay, I can't cope anymore. So you step aside. So you say, okay, I don't want to sell. Okay, because you are bullish, you don't want to sell. So get out. Don't sell, but don't buy also. Okay, don't buy also because the price is weakening. Right here, as soon as the price breaks above this line again, you know that okay, it's getting strong again. You see, and then you can buy again. Okay, here it's telling us again I'm getting weak. So don't buy. If you don't want to sell, don't buy. Don't buy. So Traders will say that the price above the trend line, this is what's happening here. These people here were buying because they say this is uptrend, the price retraces back to the trend line. But it retraces back to the trend line after a weakness, okay? So you want a price to retrace back to the trend line with a strength. But this is a clear weakness. So this is why your trader get into trouble. They say this is uptrend. That's why they told us that when the price is above the trend line, we must buy. But if the price above the trend line is getting weak, do not buy. Okay? So this is just this trade that we are taking is just using a simple definition of the uptrend and noticing a weakness of the price, because we are watching the price. We see this before, okay? Because we are looking only for opportunity to sell, so we are looking for weaknesses. Anytime we see weaknesses, we want to take advantage of it, okay? Here, the price survived. Here, it come back now. So we have a good reason, excellent reason to sell. And we are selling here. And where do we place our stop loss? Above, right there, okay? So we are asking the market, if you are serious about the uptrend, come and display a new higher high. So far, it's not doing it, okay? So this is how you will trade. A simple definition of the uptrend, analyzing the price, understanding the language of the price itself. The market does not hide anything. It's simple. It does not hide anything. It's telling us here what's happening, okay? So now the trend line is broken on this 2-minute chart. Okay, but our decision was not made on 2-minute chart. That's why I say do not make your trading decision on 5 minutes, on 3 minutes. Use a higher time frame to back your decision. Our decision was made on the weekly chart around the 76% Fibonacci retracement zone. Around this resistance zone, you see there are resistance here. That's why we are quite confident to go to the 2-minute chart to make our trading entry point. The 2-minute chart was used only for entry point to zoom into the activity and that particular point in time to know exactly what is happening. We want to know what the price is doing there. On that, if you look on the weekly chart here, okay, you don't know whether it's getting weak. You see a bullish candle. That's what you see. You see a bullish candle, but you don't know that it's getting weak. But on the 2-minute chart, we can see clearly that even though it looks bullish on the weekly chart, it's getting weak. That's why we see the 2-minute chart is telling us the present time. That's what I'm talking about. The short-term trend, the short-term cycle. This is the short-term cycle, the very, very short-term cycle, the long-term cycle, the medium-term cycle, and okay, and the short-term cycle. Okay, if a price is about to turn around, the turnaround will begin in a lower time frame and then spreading to the higher time frame. That's how it happens. But if you are looking on the weekly chart, you know that there is a change going on. You see this? You won't see any change. You won't see it. Okay, that's why you go to the lower time frame to see clearly what is going on right now. What's the reality at this moment in time? Okay, this moment in time, the market is getting weak. Okay, somebody who is looking on the daily chart, let's go on the daily chart. Okay, he will see something like this. But if he knows about the ABCD pattern, he won't be interested here to look for opportunity to buy. He will be, in fact, busy looking for opportunity to sell. Okay? But if he doesn't know about the ABCD pattern, well, then he will continue to buy, buying too late in the uptrend. Because what is confusing even some experienced traders, I see them doing that, they will draw their trend line. They will say, okay, the trend is up, so keep buying. Maybe there are some gurus somewhere teaching other people to trade. They will tell them, guys, continue to buy. I won't say to anybody to buy this time. That would be crazy to tell somebody to buy this time. You see, they will say, okay, the trend is going up, so we continue to buy. Okay, that's what they see on this daily chart. The trend is going up. It's going up. It's showing here it's going up, but it's getting weak. This is it. It's getting very, very weak right now, even though it's in the uptrend. So we can perfectly be looking for opportunity to sell. Okay, so this is how you will approach your day trading and your swing trading, okay, like a professional traders. Okay, do not fall into all the blah 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 in the market or the market noise, because the retail traders need to be a bit careful not to follow the noise in the market, and to open their eyes and look at the price itself, the number one indicator, because everything is here. Whether somebody is selling, whether somebody is buying, whatever is going on right now, it's right there in front of all of us. Whether you are living in Australia, you are living in Brazil, you are living in United States, you are living in UK, you are living in France, you will look at the same chart of Dow Jones right now. Okay, that's what we see. That's what's going on now. And the market is not lying to us, so we are selling. Okay, so keep watching, please. our entry point is in this zone here, 11895. The price went down to 11872, looking good for us. We'll sit on it and see where the market will lead us. So because we are in the pole position, we just stay there. Okay, the nice one, isn't it? So we can perfectly decide what to do now. Move our stop loss to break even, but we leave it like this for now. Okay, so we keep watching this video, we let it run. Okay, let it run and see what's going to happen. So I'm still sitting here watching this live trading of Dow Jones. So I hope you are learning something from this. Okay, so that next time you apply it in your own trading. Okay, so keep watching, please. Thank you. Okay, traders, so what we're going to do now, we're going to pause this video to avoid that the video is too long. We will pause this video, and as the price continue the movement to the downside, we will resume the video. So I'm going to pause the video now and wait for, and then to save a bit of time so that we don't have a video that is too long. Okay, so we are now pausing this video, and we will continue to record as the market continue the movement to the downside to show you how this trade is progressing. Okay, so we're just going to pause this video at this point in time. The time now is 15:38 London time. Okay, 15:38 London time, which is 10:38 Eastern time. The price now at 11881. We sold it at 11895. We will resume this video very shortly. So speak to you soon. Okay, we are just going to pause this video for now. Okay, so we speak to you very shortly. Okay, so speak to you soon. Hello traders, as you have seen, we have paused this video for some time now. Okay, as I said, we entered the trade at 11895. The time now is 6:10 p.m. London time. Okay, which is 11:10 Eastern time, 11:10 Eastern time. And the Dow Jones went down. Okay, from 11895 we sold it. It went to 11850. Okay, that's 45 pips. Okay, very nice indeed. Okay, but because today is Friday, low volume right now, the market is going a bit too slow for me. Okay, you can imagine that if we do this video live, it will take ages. Will be the longest video we ever made, so we have to pause this video to show you the activity here. What has happened is that the price went down first. Okay, it touched the Bollinger Band right here. Okay, some traders took profit. The price retraced back to the 61.8 Fibonacci retracement level. Okay, that's where I put my red horizontal line in the zone of 61.8 Fibonacci retracement level of the move from here and down to this level here. The Fibonacci trader sold it down again to retrace back to this level here. Because today is Friday, we decided to take our profit here. The price may break this support level. What we will do now, we will draw a horizontal line here. Okay, as soon as this level is broken again, we will look for opportunity to sell again. But it's Friday evening, okay, in London right now. It's not a very excellent time to be day trading, to be honest. But we will see, because sometimes, because we knew that the people should be selling Dow Jones, okay. But some bulls are still coming to the market a bit aggressive and stubborn. I hope they are right. Okay, so far we have bring the Dow Jones to this level here. Looking at the weekly chart, I'll quickly show you the weekly chart again, because this is the week that is finishing now. Today is Friday, that's why we pay attention to the weekly chart. The price in the zone of 76% Fibonacci retracement level. Next week will be very interesting. We will continue to look for opportunity to sell if Dow Jones break this level of 118. No, we will see instead if the Dow Jones break the level of 11900. Okay, repeat, if the Dow Jones manages to break the level of 11900 and find a support above 11900, we will start looking for opportunity to buy. But if you remain below the 11900, okay, we will continue to look for opportunity to sell in this zone of 76% Fibonacci retracement zone. Okay, so I hope you enjoyed this. I will show you quickly also again the daily chart, how the daily chart is looking for today, Friday 21st of January 2011. As we have located this ABCD pattern. This is the A here where I'm moving my cursor, the B right there, the C here, and the D here. If you want to know more about the ABCD chart pattern, just go to our channel www.youtube.com/George Trio, okay, and you look for ABCD chart pattern, okay. ABCD chart pattern, okay, is what we call the money machine, okay, and this is the pattern on the daily chart, okay. Looking at the monthly chart quickly, okay, we will see a different picture on the monthly chart. This is what we see. The price went down, okay, or retraced back down, display kind of an inverted head and shoulder, but we are not accepting this inverted head and shoulder, because looking at the fundamental regarding the unemployment claim in the United States, we are bearish right now at this level of 76%. If you want to learn and master the subject of Fibonacci and how you can use the 76% Fibonacci retracement level or 78% Fibonacci retracement level, you need to go to www.dayprotraders.com. For those who want to join us and also become a TSTW SYS08 traders or TSTW 24 traders, you need to go to www.stochastic-macd.com. Thank you for watching, and speak to you soon.